Welcome back to On Point. This is Market Sense. Let's get into your markets now. Tokyo's benchmark Nikkei index rising for a third straight session to a fresh 27-year high this morning. This came on the back of a cheaper yen and advances on Wall Street. Japanese stocks took a positive lead from New York, where the Dow and S&P both notched gains on news of a historic trade deal between Canada and the United States. Hong Kong's main index closed at a two-week low, however, dragged by financial and property stocks. So the Nikkei adding around 0.1% to close at its best mark since 1991 at 24,270 points. The Hang Seng dipping 2.7% to 27,038 points. The Shanghai Composite remains closed for a public holiday. The S&P 500 and the Dow began the fourth quarter on a positive note on Monday after a last-minute deal to salvage NAFTA as a trilateral pact helped ease trade worries. Oil prices also held around four-year highs after another blistering rally supporting energy firms. But most markets were in retreat as traders brushed off a positive lead from Wall Street and the US-Mexico-Canada trade deal. The Dow Jones Industrial ticked up 0.2% to 26,658. The S&P 500 gaining 0.3%. The Nasdaq Composite dropping 0.1% to 8,037 points. While some negativity on the local market, though, not much impetus coming through from the remainder of the global market spheres, however, around 0.8% down for the local indices as well. So some numbers coming out as well of Group 5, and we'll discuss those in a minute or two. And even European stocks not faring as well as one would have hoped. Let's unpack those in detail now, the local and European markets. Well, just before we head off to the JSE, where our analyst Martin Strauss from IG is standing by, let's quickly just unpack a few things for you. As we said, the oil price sitting at that four-year high as well, just around $85 a barrel. Just quickly unpack that compared to South Africa's rand. Of course, the purple mark being South Africa's rand, with the orange mark being the oil price as well, reaching that high there of around $84 and $85 even, in fact, earlier this morning as well. South Africa's rand, as you can see, has continued to weaken, particularly since around May or so, just firmly above that 15 rand mark, even hitting there. But we've obviously settled just around 14 and above now, 14 rand 40 as well, the last we checked. So this are the key factors that really take a hit at South Africa's petrol price, which you then can now look at as well and see that it's gone on an upward trajectory as well. If we take a look at that fuel price for South Africa from those low marks that we all have been so accustomed to at some stage, and having gone up all the way now beyond 17 rand even as of later this evening. So the oil price and South Africa's petrol price as well, as you can see, all continuing to go up on that upward trajectory. Not good news for South Africa. Let's unpack that oil price and even a little bit of the market movement as well. Martin Harris from IG South Africa joining us now at the JSE. Martin, thank you so much for your time. But a general sense of negativity across the market today. What seems to be driving this essence though today?
Thank you for having me, Arabile. Yeah, we've got a weaker South African market, broad-based losses, except for a few of the rand hedge stocks due to the rand weakening, possibly on the back of the new sort of salvage of the NAFTA agreements in the North America region with Mexico, United States and Canada, as well as an unsubstantiated claim that Finance Minister Nene has sort of links with the Guptas, and so he's meant to be making a representation soon regarding that. So that has affected the rand, and so we've seen quite a few of the usual suspects of, as the rand weakens, banking stocks will weaken, and as the rand weakens, the offshore companies will firm. So that's happened today, as well as we've got European markets lower. That's affected us typically due to the struggle that's happening now in Italy, where they are behind budget and are arguing with the EU with regards to what level of deficit they're willing to accept on their budget.
Yeah, all those will certainly impact the market continuously. We had some negativity last week. We had a positive stint yesterday, so we thought perhaps things would go positive today, but clearly not. One of those that hasn't gone into positive at all, definitely, is Group 5. It's pretty much sharing the sentiments of the construction stocks, isn't it?
That's correct. Group 5 managed to gain slightly today. It is only trading at just above R1. It's lost 93% year to date.
Sure.
So it's really quite a struggle. They've posted a loss now of 1.3 billion rand for the year. They've blamed most of it on a operation that they've got building a power plant in Ghana. They have had substantial losses there, as well as their South African construction business continues to lose money. They're trying to turn that business around, and they've sold off some of their performing assets to essentially subsidize the non-performing assets, as well as they're looking to cut jobs further. Now, this comes after a restructuring from last year where they cut jobs, and they're looking to enter a second round of restructuring now to cut more jobs. Things are looking quite bad for the business. They've lost a lot of their order book on the construction side. They fell from around 14 billion rands worth of orders last year, this time now down to 11 billion rand.
Surely in this industry, mergers, amalgamations, coming together of businesses would make more sense considering there's so many losses. The only one who isn't is WBHO, and that's because of the vast array of international businesses they have. Surely construction stocks should be considering coming together.
They are, and I mean, if you look even at the likes of Group 5, their Africa business is performing. It's really the guys who are too isolated in South Africa and not diverse enough who are being punished by the lack of construction in the local economy. This obviously does happen in cycles, but where we've got now an issue is that these companies can merge together, but there's still not enough business for them. There's still going to be job losses. Really, the merging is just going to improve efficiencies across the businesses and reduce competition.
Yeah, we certainly hope that the rand would, at some point test that 14 rand against the US dollar mark. That's the hope. Yesterday, we even saw it go to around 14 rand and 6 cents. Clearly not. At the same time, you have the oil price now hitting close to that $85 a barrel mark. A lot of weakness and no help here for South Africa's fuel price in the end.
Not at all. Conditions are tough. We've got a fragile oil market globally where Venezuela's on the brink of collapse, and new sanctions against Iran are set to take place on the 4th of November. They're expected to reduce output then by 1.5 million barrels of oil per day. They are the third largest producer of oil within the OPEC group. And so that has really been one of the core drivers of this oil price, is that the rest of the OPEC members are unwilling to take up the slack currently. They've increased production by around 90,000 barrels of oil per day, definitely not taking up the 1.5 million barrels per day. And so we could see oil at $100 by the end of the year if this is the continued path. Investors, with IG, we've seen huge demand for call options, which is an option that gives you the right to buy oil at $90 a barrel by the end of October. So many investors are expecting before the end of October for oil to breach $90, and then they can buy it at 90 and sell it at a profit.
Is that not a little bit aggressive though? $100 at some stage, $90 before the end of October. That's pretty much a worst case scenario. We head back towards territory we've seen only 4 or 5 years ago.
Absolutely, but it really is where we see the other producers of oil like Angola. They've been unable to even meet their targets that OPEC have set out for them. So they're unable to make supply. They're struggling with logistics in their country. Nigeria are struggling. And so we'd have to wait to see if the oil producers can catch up. At these high prices, though, a lot of the smaller guys can come online. They turn profitable versus the large, more efficient companies. And so the smaller guys might be able to come online and take up the slack. But certainly the oil price is moving very aggressively. It's a terrible sign for South Africa, especially if our currency continues to weaken. We could see petrol at 20 Rand before the end of the year.
Very, very scary stuff. Martin Harris, appreciate your time there from IG South Africa, unpacking the sad, sad news for us, of course, for South Africa's economy.